Okay, I think we're live. Let's give folks a couple minutes to join. Right, I hope everyone's doing well. What a wild day today in the market, right? We had Tesla go crazy, do its breakout, and then BA, we had it flame out. All right, let's go ahead and get started. So thank you for joining us for the this webinar and talking about the power of 1% and how one can turn 10,000 into $100,000. And let's see. So I just need to. Sorry about this. All right. So quick introduction. So Edamomo, we're a education focused company that what we want is to build better traders. As part of that, I'm Spectre, and many of you probably know me from the watch list or from BBS. And so I'm primarily a momentum trader. I've probably got over 10,000 hours of screen time, probably well over that. And I started off trading penny stocks way back when, and then I started moving to large cap, and then I discovered options, and now I can get similar reward that I was getting on penny stocks in through options. And so it was really kind of neat to discover that, and that's been great. For those that aren't aware, I do publish a watch list each morning around 9 o'clock, and that can also be found on the Edamomo website. And finally, something that not everyone's probably aware of is we do have a 2-hour trader program, and it's focused on teaching traders how to trade a couple of hours a day using my watch list and processes. And as time goes on, we're also adding more educational content, but primarily we're focused on how does one trade during prime trading hours to get the gains that come out of that. You'll see that from the power of 1%. Just a quick note, a little disclaimer. So everything you hear in this video is it's not financial advice. We're not financial advisors. We're just sharing our opinions only, and then how we approach trading. Just trading is risky, and you can lose more than your capital. So just be aware of all that. And just past performance, since we're going to be going through a model and a system that is not necessarily indicative of future results. And for any of the content that Edamomo produces, you can always see our terms of use. I have that link there. Okay, so before we go too much further in this webinar, there was a previous one that we did. If you haven't seen it, it's called Discovering Your Trading Process, and that can be found on edamomo.com under webinars. And that video is talking about a number of things that you kind of need in your process and your trading process. And one of that is building a system. And that's what we're kind of covering, the power of 1% as a part of that trading system. right? So when you're building a trading system, you've got some challenges, right? So you want to build a system that, hey, can it grow your account by 10x? I need something that is going to get me, like, if I've got 10 grand or 50 grand in account, I'm going to need to have it be something that can replace my existing income, right? And if you're making 10% a month, maybe 5,000 a month is enough for you, but maybe you're looking to get 20 or 50,000 a month, but you're going to need to grow your account by an order of magnitude at least. And so you need to have a system that can get you there. Does it have good risk reward? Can it scale? So is this something that you can only do at certain sizes? Maybe your goal is to get to $10 million of trading capital. Maybe you already have 10 million. Does your trading process support that? And so you need to make sure it can scale. Then is it repeatable? Can you keep doing these kinds of trades, or are your wins all flukes, or they're just kind of random and you just really don't know how things will likely play out day to day? And so you're trying to maybe catch every single trade out there. I wouldn't call that necessarily repeatable, right? Maybe you're great and you can do all of that, but what I found is, yeah, there's a ton of trades that I see, but I don't take them because it doesn't fit into the model that I'm looking for my power of 1%. And so I let it go. And then also you want to be able to have a system that can survive losing streaks. So there's going to be times where you're just off, or your system doesn't work with how the market is now moving. Just because it doesn't work 2 or 3 times doesn't mean you should abandon your system, right? It just could be something is off for a couple of days. But now if you're losing 20 trades in a row, then that means something's weird, right? Something has gone wrong, and your system needs to be able to survive 20 trades in a row that are wrong and not blow up your account or not drop down to 50% of your account size, because coming back from 50% loss beyond the mental fatigue it'll create, it's tough, or it can be. Right, so you want to build a system that can do at least these 5 things. Okay, so here's where the power of 1% comes in. And so I'm not sure everyone was aware. Many of you probably seen me talk about this or read the blog post I had about being the turtle and not the hare. That you can use 1% to grow 10,000 into 100,000 in a year, and you're following the same system, 1 million in 2 years, right? And you're like, hey, that doesn't really add up, right? Because if there's 250 trading days in a year, and you're doing 1%, so that's roughly 250 1% growth a day at 250 days. That's 250%. So if 250% of 10,000 is 35,000, I'm not going to ever get to 100K, right? But 1% is based on compounding and the power of compounding. So we'll go into that in a little bit. But what I'd like to do is introduce everyone to Swan. So we had a conversation a while back, and it kind of changed how he approached trading. So Mr. Swan, why don't you go ahead and tell us a bit about your experience? And
Absolutely. Thank you, Spectre, for having me on today. So my trading day started several years ago. And when I first started out trading, I started like Spectre doing penny stocks, and soon got into option trading and found that was a great way to make a lot of money, but it was also a great way to lose a lot of money very quickly. I was focused on hitting home runs with every trade. I fell into some very bad habits. This led to me seeing a lot of green trades go red. It caused me to start over trading. Countless times I would see green days turn red because I would stay in front of the trading station and continue to trade because of the fear of missing out, that FOMO that you talked about. I was risking way too much capital for minimal gains. Especially as I started seeing my account get lower and lower, I was quick to take gains, and then I'd see those stocks run after I was already out. So I realized something had to change. I had to change my mindset. I had to change my trading plan. Actually, I didn't have a trading plan, to be honest. I had to develop a trading plan. I had to learn patience, self-control. Those were all things, emotions that I had to develop. Well, then I was introduced to Spectre through Edamomo and another website and his watch list. And that's when I started to see some things change. I had to have a come to Jesus meeting with myself, so to speak. Um, I already blew up this account pretty much all the way because of those bad habits. But that power of 1% helped me to see that not every trade had to be a home run in order to grow this account. And at first, at 1% a day, you look at it and you're like, "Well, how am I ever going to gain any ground making this much money a day?" But it's, as you mentioned, Spectre, it's that compounding, that number keeps growing and growing and growing, and eventually, after that first 6 months, you really start to see it take off. The purpose of that 1% is to set. It's an attainable goal. It helped me gain confidence in my trading plan because then I could see that it was a repeatable process. I had good risk reward. I could take losses and it wouldn't hurt because I was quick to cut them at a certain point. So that was all things that helped me develop that confidence that I needed to help develop that patience and that self-control. One of my favorite movies is Moneyball. I don't know if you've seen it, but it helps you see that in order to win baseball games, you don't need players to hit home runs. You need players that get on base. And that's really what the power of 1% is. You keep getting on base. Soon the home runs come. That's true. But the end result is your account continues to grow and grow and grow. So the result for me is now I don't overtrade. I trade in the morning for about an hour maybe, and then I maybe come back in the late afternoon. But once I get to that 1% plus for the day, I tend to leave the trading desk. For me, that means I have to leave the house. Because if I'm in the house and my computer's there, I'm going to find my way back to it. If you follow me on Twitter, you'll notice that many times during the day, middle of the day, sometimes all day, I'm out spending time with my wife and kids doing fun things. There's some days I don't trade at all if I'm just not in love with any of the setups. But that was all things that before I would have just sat in front of the screen and watched and made trades out of boredom, over traded. So that power of 1% helped teach me the patience and self-control to just walk away and come back tomorrow if needed. And truly, the blog that you put out is where I first saw it, the power of 1% with the tortoise and the hare. Changed my account. I hope it does others as well, Spectre. Thank you.
Thank you. I'm glad. It's great to see. 6 months later, right, and seeing the vacations you're taking from your trading gains and these pictures that you put out on Twitter and everything. So it's congratulations on the progress you've made and looking forward to seeing over the next year what your account does.
Thank you very much.
All right, let's continue. So what I've done is I've created a spreadsheet and a model to kind of demonstrate how people are trading today, and then also the power of 1%. So what a lot of folks do today is they're doing FOMO trades. They might have a high win rate, but they're taking high risk, but for small gains, right? And so let's just say, hey, I'm willing to risk $250 to make $100, and after a couple hundred trades, they might be up about $9,000 for the after 200 trades, and after 500. So if you're doing, say, 2 trades a day for a year, you're going to be up maybe $20,000. Like to 3, you tripled your account, which is still great, but it's probably not why you got into trading. And the big issue with trading this way is that if you're risking $250, and this is the model where you're starting with $10,000, and you say, hey, look, I got to stop trading if I lose half my account. So if you lose $5,000, you're kind of like, okay, something's wrong. And And so if you do that, you can only survive 20 trades, 20 bad trades, right? That doesn't leave a lot of room for bad discovery. It doesn't leave a lot of room for, say, that you got in with more size than you should have, and you end up losing, not instead of 250, you end up losing 1,000, right? I know I've been there, and where you're kind of like, hey, you know what? I'm going to get that little bit of gain, but you're taking way too much risk on. And you get smacked every now and then. And so, yes, you might be able to grow your account and say that you're, instead of doing 2-day trades a day, you're doing 20 trades a day, right? And so, or 10 trades a day. Then at the end of a month, you might be up to $20,000. And doing the same thing, you might be up after 3 months or 5 months, or no, sorry, 2.5, 3 months, you might be up to 30,000. So that's pretty good, right? But sooner or later, you're going to have a losing streak and you're going to get smacked. And at least that's what my experience has told me, that, being able to survive 20 to down to 50% is not necessarily the best situation or model for trading. So then maybe you've got a different trading system, and your system is where, hey, you know what, you're right, half the times you're risking $250 a trade to make $500. And so, again, the same thing. After almost a year, you might be up somewhere like 70,000, 90,000. Not bad, maybe 50,000. But again, you have a survivability issue, right? The reward and the risk is good. The win rate is okay. You being right half the times and still being able to grow your account, that's pretty good. But the survivability is a bit of a problem, right? And so, again, after 200 trades, to only be up 10 grand, where you've been risking 250 a trade for 500, doesn't seem like necessarily the best growth for the account. To me, it kind of is okay, but this makes this only being able to survive 20. I'd like to say that, hey, if you're wrong 20 trades in a row, then that means maybe it's 18 or 10, or you're right 1 or 2, but your net kind of, things aren't working. I don't want to be down more than maybe 10, 20, maybe more than 20% of my account, where I'm now saying, hey, look, I need to make some change in something. Otherwise, my account's going to, shrink quite a bit. And then when your account drops by a large percentage, it also creates mental issues, right? Because then you start losing your confidence, you start doing all kinds of things that you shouldn't be doing, such as trading too big, right? So it just starts creating a lot of issues that ends up making your account go smaller and smaller and smaller. And it's partly because taking on too much risk, not necessarily having the right system. All right, so here's a little bit of a graph. So just wanted to talk a little bit about that, about starting out trading the way that many of us did. I did as well, where you take on too much risk, taking for crazy gains sometimes, and then losing big as well. And so I started working with Mo. Probably, I guess it's been almost a year now. So Mo, why don't you talk to us a little bit about your trading experience and things that you've learned since you've joined Edamomo and the 2 Hour Trader?
Sure. Thanks for having me, Spectre. Before joining Edamomo and learning from Spectre, I was making many of the mistakes that Swan, mentioned earlier. I was over trading. I was taking on way too much risk to make not enough money, to be honest. Oftentimes when we enter trades, we focus on what we intend on making, right? But we lose sight of, the risk that we're taking on and how much we could potentially lose in the given trade, and given where the current chart setup is, And Spectre really, hammered it home with me that stop focusing on the P&L and chasing the dollars, chase better setups instead, Once you start nailing the setups, having good risk reward entries, like money comes a lot easier. Trades are a lot less stressful, as opposed to, when you take on too much size and you don't have a good entry, now you're 20, 30% red immediately if you're playing weekly options, right? Now the emotions are getting to you and you're thinking, do I double down? Do I cut for loss? And oftentimes, you cut your trade because you had a bad entry, even though the idea was correct. And then a couple hours later, it would have worked out, and you miss out on all the gains that you could have had. And the reason I was missing out on potential gains and taking these losses was because my entries are not the best risk reward ones. So, following Spectre, I started trading smaller than usual, but focusing on better risk reward entries, better execution, and sticking with the idea and cutting my losers early, when I realized that, my trade's not going to work out. And that's a mistake a lot of people make, that they don't cut their losers. They fall in love with the idea or position and stop paying attention to the chart. Where as the key to continued success is cut your losers early and let your winners run. That's the only way you will consistently beat the market and make money. So I guess to sum it up, it's all about having a consistent process, managing your risk, and instead of just focusing on making X amount of dollars a day, focus on having the best entries possible and minimizing the risk that you take on in any given trade. I like having a defined, risk like level that I'm risking off of. It could be VWAP, could be a significant, support area, resistance area if I'm going short. And unless I have that, I try not to get into a trade. Because if you just chase random candles like, oh, this is a breakout or this is a breakdown, and it's gonna come back and smack you in the face, So,
right? Yeah. I'm sorry, I'm just laughing because I just remember the days where you jump in because it's a breakout, and then it slams down on you, and you go and you believe in it so much, and you have too much size, and then you get stopped out.
Yeah, it has happened way too many times.
Yeah.
The key is, even though it is a breakout, wait for a little bit of a retracement to a previous high or something, and then you get it. Right? You just don't chase something when it's parabolic with full size, because it's not a good recipe for success. It might work out a few times, but at one time where it fails and comes down, it will definitely be pretty bad. Yeah, it'll wipe you out.
Yeah, and so it can wipe out like I've had it where I've done that, and then you might have 15 say green days, and then you get cocky and you're like, oh, you're gonna just get complacent, and you're like, oh, I've got all these profits, so I'm gonna go bigger than I normally do, and you end up wiping out all 15 days and then some because of the revenge trading that falls in, all because you wanted that bigger gain instead of sticking with the process and the system.
Absolutely, and I think that's happened to many people, that they develop a aura of invincibility once they've been on a very good winning streak, that I can't lose now, and then it's very easy to revert back to your bad habits when you start thinking that you're Midas. Yeah. And in reality, none of us are Midas. We make money by taking the best setups and managing our risk, and when we deviate from that, it sets us back and wipes away days and weeks of progress, like Spectre just mentioned.
Yeah.
But when you're part of a community, you can keep each other honest, lean on each other, and try to avoid those kind of lapses and stay consistent.
Yep. Okay, thank you, Mo.
You're welcome.
Yeah. So another note on that is that with that, that's where shifting from, say, a fixed dollar amount where you're looking at your P&L and you're saying, hey, I need to make $500 today. And when you're focused on that alone, things turn into a problem. And instead, that's where the percentage-based thing comes in, is that you're by focusing on percentage-based trading, one, it sets it up that your process is up for growth later down the road when your system is working well, and you can manage your risk reward. And so let's go through and do an example of the percentage-based trading. All right, so this is essentially the same setup, except what we're doing is we're changing from the dollar-based to a percentage-based. So we're saying here, hey, I'm going to risk 2.5% of my account to make a 1% win, similar to the risking $250 to make $100 that we had on the previous system. Same situation where you can survive 20 bad trades and you get, well, survive, quote unquote, but your account goes down to 50%. But after 200 trades or 500 trades, you could have the potential of more gains compared to the previous system. And then on the other situation where you're risking 1% to make 2%, and you have a 50% win rate, you can actually go and survive now. Let's see, is this calculated? Sorry. Yes, that's right. Because you're risking 1% of your account to get to half, you can actually survive 50 bad trades in a row before you get to that 50% cutoff mark, right? So that's a lot better, because if you can have 20 bad trades, you're down to that 20%. You can make adjustments to get back on track. And you can see here, risking 1% to make 2, you're right half the times, that your account now, after 5 months, right, say that you're doing 2 trades a day, 100 trading days, that's 5 months of trading. It's still not great, but it sets the foundation up. So all that work that you're doing here for the first 5 months of trades, right, doubling, basically getting to a double on your account, a double, triple here, that is foundation work to get you set up for the next 6 months, right? The first 5 months, 6 months, you should just be looking at, hey, look, if I can just do this 1%, hey, I got 10K, if I can just get if I can get $100 a day, right, or 1%, and you're just like, hey, for the first month, if I can just get $100 a day, you're gonna make $2,000, which isn't bad on a $10,000 account. We grew your account 20%, right? But it's setting the foundation that's gonna get you to much larger gains, right? You can go anywhere from, so this is all kind of random for how the performance is on a per trade basis. But you can play with this and kind of get an idea of, hey, if you're trading, you can see more often than not, you're right around at least $100,000, right? Sometimes this is under, sometimes it's way higher. But, it's good growth, starting from a $10,000 account to be able to get to this. Now, if you notice, it's only 2 trades a day. So imagine only doing 2 trades a day, where you can make, between those two, you're making $100. $100 per trade. And that's going to get you pretty good progress. Now, the power of 1%. So what this is it's more, again, it's percentage-based trading plus survivability, right? So one example is, okay, you say you're back to the 50% rate, but you're risking 0.5%, and you're going to only take trades where you have a 3-to-1 risk reward. So where you now have a 1.5% gain, risking 0.5% of your account. So in the case of a $10,000 account, you only take trades where you're able to enter and risk $50 to make $150, right? In that process, you now can survive 100 bad trades in a row, and you still get 10x at the end of a year. Oops, wrong one. Sorry about that. Right, so you still have the ability to take $10,000 and turn it into 100,000 or more, but you got to believe in the math, right? Another model is that, hey, so the setups that you take have a higher win rate, and you're just taking the gains at 0.5%, and the reward is 1%, so 2-to-1, right? Again, good reward, much more consistent. You're not even holding for the big gains. You just need a better trade setups where you're just getting 2-to-1 risk reward. And again, you get your 1%, 2% reward on the day, 2 trades, you're good. You don't need to overtrade. So you just take the 2, 3, 4 best trades in a day that can give you your net 1 or 2% gain on a day, and you're gonna see some great growth. Okay. And that's all this is. It's not, the hard part is accepting that the first 5-6 months is really slow going, right? Especially the first 2 or 3 months. People get really, really frustrated, right? But the nice thing about this is, yeah, you might be losing, but you should be losing small. And it's the time of discovery. It's the time that you can work through your system, learn how to trade better, learn how to get your entries better, get your sizes right, get your exits good, choose the setups that you want to trade. And that's that discovery period right here. So your starting point of regular consistency, the maybe later, maybe earlier, but the point is you're going to be able to survive this game, and you're working toward a system or a process that is going to grow your account, right? So you bottom line, you got to stop chasing, hey, I got to make $1,000 today, I got to make $10,000 today. What you got to focus on is, can you find trade setups, right? The magic in this is stepping back and understanding and accepting that if you can grow your account by 1% a day, right? That if you're getting that 1, 2, 3% on that day, you don't need to keep trading. You've done your job for the day. Because by just stopping and accepting that the math works, that compounding works, this is where you're going to end up, right? And for those that are joining the 2-hour trader program with the community, for the first, even though we start with 50, I always say, hey, let's start with 10 and risk $100. But after you've got your system and model set up and starting with 50K, you shouldn't be surprised, okay, if this is where you end up a year from now, okay? It shouldn't come as a surprise. But it all starts with starting small and getting your foundation solid, right? And that might take 6 months. And be okay with that, right? Because you're learning and building and accepting that 1% is going to change your world, right? And it's super attainable. A 1% gain daily is super, super attainable, risking 0.5%. This is not like doing anything super hard. And the edge we get in the 2-hour trader program with the trades that I take, I mean, a lot of times, these turn out to be like 5% or 3%, right? So those gains are kind of a little bit more crazy, but let's just stick with the point being, for now, do the 1%, get that down, hone your system, hone your process. You're going to get bigger gains, and it'll come. Now, there's questions about the model, I see. What are you doing to update the calculation? Oh, actually, I just pick a cell that's empty, and I just hit backspace. And it'll just keep randomly updating the calculations. And everyone, you can kind of go through and see the model and the math and how I did this. Here's the starting price, you're doing a win-loss based on these percentages, and what you end up with, and then just repeating that for a ton of trades. So we'll be sharing this model for you guys to adjust and adapt for your own use. Just make sure you sign up for the newsletter at edamomo.com, and we'll send it out to this newsletter subscribers probably tomorrow, and so everyone can have an example of that. So any example on 0.5%. So on a $10,000 account, that would be Nick, that'd be risking $50 on a trade. So that doesn't mean your capital use is $50. That just means you don't want to lose more than $50 on that trade. Right? And so what that forces you to do is find trades that you can play for the bigger move. Not just where you're going to get, hey, I'm in for 5 minutes, but trades that are going to give you a good risk reward, that you're going to get paid maybe in 15 minutes, maybe in 2 hours, maybe in 3-4 hours. So am I leveraging more in trade but keeping my risk? Well, I do things. How do I say this? because of how if you notice some of my timing, those that are familiar with me in the chat rooms, is that my timing for when I jump into things, they just start going, right? And because I'm good with that timing, I'm usually starting small and then I scale up as soon as it's starting to work, and my stops are way tight. And yeah, so let's go ahead and continue. Okay, we're down to the Q&A. So go ahead and fill out a question. So for those starting with 1,000, I find it tough. Like I have to be really, really selective on the trades you take, and yeah, I think that's what it really turns down to is you got to be super, super, super selective and wait for the big plays, and that might mean you only take one trade a week or two trades a week, but you got to show up each day to look for those. And so the trades that I do, a lot of them are based on the watch list and looking at levels. So if you notice, a lot of the times I'm kind of giving guideposts or guidelines, because the way I do my trades is I'm trying to get in as soon as I see the shift in momentum, right? Because I'm not getting in, say, and averaging down. I'm trying to get in, and I like to average up. And so say something is at $4 and it pulls back to say 350, 320, and I'm thinking it's going to go to $6. I'm wanting to get in when it starts going from 320 to 340, 350 versus on its way down. So so I hope that answered that question. Let's see. What do you mean by a big trade? Okay, so there's a lot of different kinds of trades. An example of a great big trade, there's two we had today. One was the gap up on BA, right? So it pushed up. It's up from 180 up into 220, 224. It's a big gap up. It's a potential sell the news event. And if you had taken just one contract, having an idea of that big picture that it may fade, you could have taken, say, the 215 puts. I don't remember what they were, but we closed the day near 203. So that was a big momentum gap up fail. There were 210 puts being bought, 215, 212 puts, I believe, being bought that we saw in option flow. And if you join one of those at a small price, risking maybe 50%, so maybe it's $2, you're taking $200, risking $100, or maybe $50, so you're having a tight stop on it. And if it did work out, those 210s at least went to $6 or $7, if not eight to 10, right? So you have $1,000, you're taking one trade, $200, and it's just for a big move. So you're participating and looking for trades that can have big moves. Tesla's another one, where when it broke out of the recent high, that there was a strong move possibility for going to 480 plus. I believe those 480 calls ahead of the breakout were roughly $2, $2.50, and they got to $15, $16, maybe $18. So you can double your account, but you have to be really, really choosy on the trades. Okay, to join Edamomo, so you can go to edamomo.com, and there should be a link. I'll come back and share it, but I believe it's under join, and then there's 2 Hour Trader that might be listed there. Otherwise, I'll do a post or a link. I'll update the links in the description on YouTube. Actually, I think there is a link in the description there today. All right, so this might be too large a question, but how do you develop your watch list in pre-market, finding those levels? It's a lot of the levels, it's all based on previous support and resistance, and just experience on, maybe there's no level there. It's just based on experience on how things will go, and then I do a lot of reading and filtering in the morning for deciding which what I want to trade. So the good thing is you do analysis so we can learn, but I don't know when you're in and out. Okay, so a lot of that is you can use the levels for the watch list, right? And going, hey, if the watch list, for example, was 465, 467 on Tesla, and it broke that, then if it gets to around 480, 482, I'm probably going to be looking to lock in there, right? I'm not necessarily looking to lock in at 470. I'm looking for it to move to 480. So you can use the levels on the watch list to kind of define where I think it may go. Okay, so John, so you say, hey, if I'm making a lot of money, why do I and trade a couple of hours and be done with it? Yeah, I could do that, but I'm looking to build beyond just Edamomo, and there's going to be more stuff that will be released down the road. But I'm looking for traders to develop good traders because I want to have a fund that is run by traders I've trained so that they are kind of like growing my money and down the road. So it's kind of me having my own fund. So and I trust how they're trading because they're trading how I would trade. The other reason is that I don't trade a lot of the capital I have. So if I have more people who know how to trade the way I trade and they can start alerting, I can put more capital to work and thus make more money. So that's why I do it, John. Okay, so any other questions? Okay, if I lose capital marked for the day in the first hour, do you recommend not to trade the entire day? That will depend on. Wow, that's a tough question. I would say that it's not necessarily a bad idea, but it would kind of really depends on the trading system you have and how you select your trades. But in the first couple of hours, if the trades are not setting up, then maybe not. A lot of times I say, hey, I'm not going to take any more trades, and then something shows up out of nowhere, and then I'm right back in. But only because the trade setup is there. Otherwise, move on. All right, so the costs and everything they should be in the 2-Hour Trader links, so you can go through there. What else? Anything else about the 1% and why 1% or risk reward? Yeah, so I look at everything like algos, like black box. I use black box stocks. It's a great platform for seeing flow, and so I do believe in it. I don't blindly follow it. I, I tend to kind of look at charts and what's moving, and look for my setups that fall in my alignment. And then I also look at the flow and say, hey, is big money on the same on like I'm more of a like, hey, is big money doing what I think should be being done, versus me looking for what big money is doing, and then me chasing them, because I don't need to take a lot of trades. Based on my watch list and what's happening there, I can usually find 2 or 3 or 4 good trades in there, and I've met my goal for the day. Right? Now, other times you have certain setups where you're like, you see some flow and they're just like banging on something, and you're like, hey, you know what? Does the chart agree with that? Is there a good setup there? And if so, hey, that's I want to in on that. How normal is it to blow up accounts first year of trading? I've probably blown up my account like when I started. Since the day I started way back when, I've probably blown my account more times than I can count. Right? Trying to figure out how to do all this. I did everything the hard way. I've done every single mistake possible. And because mostly, if you've been successful in other things, that you can't get cocky, and you're just like, hey, what the hell, like, right? And then also from an engineering background, for me, things were kind of a discrete level. Like things were like, okay, if it goes to this number, then it must do this. But the fuzziness that happens with how stocks move around a number before it does the next thing, I had a strong, trouble accepting that. And yeah, like God, it was ridiculous. And so yeah, I kind of wish I had probably found some books and did things the easier way. But now it's just I've come up with a process that just kind of works. You just have look for great risk reward. Don't need a lot of risk, and when you get your 1, 3, 5% gain for the day, you call it a day. It's good enough. And the yeah, so it's so for that's one of the things. Since I've made a lot of the mistakes for members when they're asking about this or that, I already kind of have an idea of what they've already experienced or what happened to them during the day, and what and because I've done there and I've been there. Yeah. Anyways, I'm just super happy to see how to have a nice system that just kind of works. Okay, when you enter a trade after a price level is reached from your watch list, what is the confirmation? Oh, yeah. So generally the retracements, right? So after something gets, if I'm interested in a long, then I'm looking for that support to hold or reclaim, and then I'm looking for a higher low. And then what I'm doing is I'm trying to figure out the risk to the previous level. And if I can have it, and then is there enough room for it to go for the reward? And if there is, I'll give it a shot because I don't mind. I don't care losing. I don't care being wrong. I don't swing trade. Okay. So this is I focus on trading in the first 2 hours. I do some swings here and there, but my net, I don't want to have more than 5% capital exposed overnight because 5% I can make in a day. I don't worry about that. But if it's 10-20%, it puts me in a really bad mood. And starting the day down a ton because of the way the market's moving nowadays, it sucks. And then I miss a lot because of the gap ups that happen, and I was in, and then I size down. But I just have to accept that it's not how I trade. So, all right. Well, thank you everyone for joining us. Thank you, Mo. Thank you, Swan. Really, really appreciate your taking the time out of your busy days to come and talk with everyone on the webinar. And thank you for everyone that joined with us. And see you guys next time. Take care.